Welcome to day 6 of our 30-day trading podcast series. I am glad you are here because today's topic is one that can make a huge difference in your trading journey. That is choosing the right trading strategy for your personality and lifestyle. The main objective is that it is to help all of you to understand that there isn't one size fits all trading strategy and how to select a trading approach that aligns with your personality, risk tolerance, and your lifestyle. So many traders make the mistake of copying someone else's strategy only to find it doesn't work for them. Maybe it's too fast paced, or maybe it requires more time than they have. The truth is, the best trading strategy for you is one that fits your own temperament and lifestyle. Today, we will talk about how to find that perfect match. Why the strategy matters. Trading isn't just about understanding the market, it's about understanding yourself. Your personality plays a big role in your ability to stick to a strategy. For example, some traders thrive in fast moving environments, while some others prefers to take their time analyzing the market. If you pick a strategy that doesn't fit your style, you are more likely to abandon it when things get tough or when emotions kick in. And as we have talked about before, consistency is key to long-term success. So the strategy you choose should fit your natural decision-making process, your risk tolerance, and how much time you have to dedicate to trading. The types of trading. Now let's explore the different types of trading styles, each suited to different personality types and lifestyles. The scalping. Scalping is all about quick, small trades that aim to capture tiny price movements. It requires intense focus, quick decision making, and the ability to stay calm under pressure. Scalpers might make dozens of trades per day, usually holding positions for just seconds or minutes. It is best for high energy individuals who thrive on fast action and have the time to sit in front of the screen for hours. Not ideal for those who get stressed easily or prefer to make fewer, more deliberate decisions. Day trading. Day trading involves buying and selling assets within the same trading day without holding any positions overnight. Like scalping, day traders need to make quick decisions, but trades last longer, anywhere from minutes to several hours. Day traders typically spend a few hours a day trading and analyzing the market. And it is best for traders who like fast-paced environments but don't want to be glued to the screen all day. It is not ideal for the people with limited time during market hours or those who can't handle the stress of rapid market changes. Now coming on to the swing trading. Swing trading is all about capturing larger moves in the market that occur over days or even weeks. It requires patience and a solid understanding of market trends. Swing traders typically check the market once or twice a day to manage their positions, making it ideal for those who have commitments. It is best for traders who prefer a more relaxed pace and want to fit trading around the other parts of their life. And it is not ideal for those who are looking for the fast results or who are easily frustrated by holding positions for over days. Now coming on to the positional trading. Position trading is a longer term approach where traders hold positions for weeks, months, or even years. It's often based on fundamental analysis, but technicals also play a role. Position traders aren't concerned with short-term price fluctuations and are more focused on the bigger picture. It is best for people who don't have time to watch the markets every day and are comfortable holding positions through market volatility. It is not ideal for traders looking for quick profits or those who find it hard to stay patient over long periods. Now, choosing the right strategy is more than just understanding how each style works. You need to find one that matches your personality. Here is how that you can start figuring that out. The risk tolerance. Are you someone who can handle a lot of risk, or do you prefer to play it safe? If you are comfortable with volatility and quick decisions, a fast-paced strategy like scalping or day trading might work for you. But if you are more conservative, swing trading or position trading might be a better fit. Patience level. Patience is a huge factor in trading. If you are someone who needs to see immediate results, you might struggle with longer term strategies like position trading. On the other hand, if you are comfortable waiting for the perfect setup and don't mind holding positions for several days or weeks, then swing trading could be the ideal. Time commitment. How much time do you realistically have to trade? If you dedicate several hours a day to sitting in front of your computer, day trading or scalping might be an option. But if you have a full-time job or other commitments, swing trading or position trading might make more sense since they require less screen time. Stress tolerance. Do you thrive under pressure, or do you get easily stressed out? Fast-paced trading strategies like scalping can be mentally exhausting and stressful. If you are someone who prefers a calmer, more measured approach, swing or position trading will likely suit you better. By taking stock of your personality and lifestyle, you can narrow down the type of strategy that will not only work but will also be something that you can stick with it for a longer period of time. Once you have identified a strategy that seems like a good fit, the next step is to test it out without risking real money. Use a demo account or a paper trading to practice executing the strategy and see how it feels. Are you comfortable with the pace of trading? Do you feel confident following the rules of the strategy? Are the results aligning with your expectations? It is important to test your strategy under different market conditions too. Sometimes what works well in a trending market might not be as effective in a sideways market. And remember, you don't have to stick to one strategy forever. As you grow and evolve as a trader, your preferred style might change too. The key is to stay adaptable while ensuring that whatever strategy you use aligns with your personality and risk tolerance. Don't feel pressurized to adopt a strategy just because it worked for someone else. What's important is finding that what works for you. To wrap up, finding the right trading strategy is a personal journey. It's about understanding your own personality, risk tolerance, and time commitment, and aligning those with a strategy that you can stick with through the ups and downs of the market. Whether you are a fast-paced scalper or a patient swing trader, there is strategy out there that is perfect for you. In tomorrow's episode, we are going to take a closer look at risk management techniques, arguably the most important aspect of trading. I'll share those practical tips for protecting your capital and minimizing losses. You don't want to miss it. Thank you for listening to today's episode. If you are enjoying the podcast, please subscribe and share it with others who are on their trading journey. Until next time, happy trading. Thank you everyone.